73, 79, 1990, 2009, we had oil spikes and all were followed by recessions. So there's a lot of indicators right now where the dollar, I compared this, this is the commodity index gone straight up and the US dollar. Now, typically when, gold's going up, the dollar's going down. Right now, you can see the dollar's going up and you can see the commodity prices are going up. And certainly oil is leading all of this. And look, I don't like to play this fancy armchair economist. I just like to point out conditions and, then we see where things go. So to me, it's all based on price action, and ultimately everything comes down to a risk reward determination. So whatever's going on in the market, it ultimately comes down to creating these risk reward calculations. And, even though I've seen the market come down, and the market has gone down, it's still an extraordinarily difficult condition, because whenever you get short, you build up this energy, and everybody's short, and then if there's a moment that the market needs to recover, people are buying, and then those who are short need to cover by buying. So it creates this huge vacuum, and you get these explosions. And so you can see that we get down here and then it goes up 10%, then we get to 305 in the IGV or the QQQs, and it goes up 15%. So, I've been saying to my wife, I've been like screaming, I've been short. And I said, I'm short a market that, is going straight down, except every tick is an uptick. I don't know how this is accomplished, but it's, not been an easy ride. I mean, I've been making money, and then the problem is, when the volatility expands like it has now with the VIX over 30, all last year, the VIX was like 17, which indicated very complacent, low volatility. Now we've got these enormous premiums, so that even if you want to do options, the options are 5 times more expensive, which means your risk goes up more and then your leverage goes down. So even though I'm seeing the moves, I'm making less money than I was in previous periods. So this is an extraordinarily challenging environment where, it's 3 steps lower and then 2 steps back. So the indexes were crashing today. The Dow was down 500 points at one point, and now it's down 100 points. So this is what's been happening. It's like goes down and then finds these vacuums, and so it ultimately comes down to finding your trade where you can get in and understand a risk reward dynamic. And the markets are all scheduled to open somewhat lower now. And, I don't like chasing those kind of market conditions. To me, I'm looking for actually to sell into strength and to buy into weakness. Actually, I was kind of looking at Caterpillar, talking about buying into weakness. And, we kind of got under this area here, and then put on this little bottom. So, and now we're above this neckline again, indicating that this was could have been, a bit of a bear trap. And then we had this key reversal on Friday, made a new low, close on the high. So let me see where Caterpillar's, I've got so many lists now. So Caterpillar is going to open about $1 lower. That could be a stealth little buy against Friday's low at around 190. So, I'm just, when something comes down this hard, it doesn't usually go up that much, that quickly. So this may have to, build away. But, again, I look for pockets of weakness. I think when you see yesterday's key reversal of Friday's, it typically, these days kind of tell me, where the, pockets of risk are. And so that if I can get a price pretty close to this point of 190, this thing goes down to 192 or something like that, it may be worth a nibble, because typically, even if it opens there, it needs to shake hands with that unchanged level. So there may be a small trade in there. I guess what I'm trying to say is right now I'm kind of struggling for a trade. I was looking at these resort. So another kind of thing that supports in my mind this feeling that maybe there's an impending growth slowdown or even a recession is I'm looking at these reopening or travel stocks. Now, Corona is basically, kind of over and done with. It was like yesterday's problem. In Florida, no one's wearing masks anymore, and it's like a new consciousness. It didn't even exist anymore. It's really weird. So, but now we should be looking at these reopening trades, and to me, they all look really bad. This is Wynn Resorts, and you have this top right here. You have this top right there. You have this Head and Shoulders. So this whole thing feels like a long-term distribution. It's like a descending triangle. And then now you've been sitting on this ledge underneath here. So you effectively broke the neckline of this pattern here. And now you've just been trading in this range back and forth. And to me, this looks like it's going to break this lower edge of the range, and it's then got nowhere to go but lower. So, I'm kind of looking, if we kind of get a little higher up in here, to me, this seems like kind of a no-brainer to kind of just put a toe in the water. But, the danger is it could just keep on, kind of going nowhere for a little bit. But I think, this is looking pretty mature, that it's going to start leaking to the downside. You can see, 45, it's 1.3 million.
$1.3 million short.
So popped out a profit for 118,000 there.
So you can see how it's going crazy now. You can see how the market just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.